Good evening. Ira Epstein with your Metal Market Wrap-Up, and this wrap-up is for Thursday, the 21st of September, 2023. So we saw a day today where the markets did what? We saw central banks come in, Bank of England go flat. We saw Sweden, Norway go up to meet the ECB rate hike. Many trying to say they think they're through, although the Riksbank didn't sound like it to me. It still could be going up another one hike. Yet the stock market in America went into a tailspin, a big one. And why? Well, the delayed reaction is what I always think. I tell you, we get that yin-yang impact. We do something in America, then it goes over to Asia because if it comes out in the afternoon, a Fed speaker speaks at 2 in the afternoon. What time is that in Tokyo? Then it goes into, and by the way, that's about 8 o'clock at night, 8:30 at night for the press conference. Traders aren't paying much attention to what he's saying. So as they wake up in Asia, then they wake up in Europe, it comes back to us. Our traders look at it, see the reaction, and now everybody's up at one time, and boom, the markets make a move. It's yin-yang. You can go up, you can go down. You never quite know which way it's going to go. So what's the impact of higher interest rates? Initially a higher dollar, but I don't call a 25-point rally today a super big rally in the dollar. Where it hit was the stock market, and it kept pressure on the metals, but they haven't gone into a state of collapse. You're not down to the 1900 level in the gold market, so everything's got a point. Now, what you have done is you've taken interest rates back to the levels we haven't seen since 2007. It's what? Whoa, nearly what, 20 years ago? Just shy of it? Wow. And that's here to stay for a little bit. So what's the cure for higher interest rates? It's simple. It's higher interest rates. What's the cure when you get high prices in a commodity for that? High prices will draw in commodities more goods. Well, what happens in high interest rates is you shut off demand. Once you shut off the demand, you don't need the high interest rate. There's nothing chasing money to buy. It goes the other way. So we're recalibrating that. We've entered that phase. I think it'll be short-lived. I think the market will do this break. If you remember my special report a month ago in the S&P, it predicted this. It said that October would be one of these spinning months and that I expected a Santa Claus rally. If you got the report, you know what I'm saying. If you didn't, too bad. I don't know what else to tell you. When we come to the gold market, as we can see, the gold is still staying under the 18-week average of closes, which means it has a bearish bias. When I take a look at the Dece Gold and I look at it here, honestly, even though the stock market went down at one point, 400 points today in the Dow, and like, so what? This didn't come unglued. So don't let that get to you. The pattern here is a lower low, higher high, not a trend. The market has been fighting and is still in the process of fighting at the 18-day average of closes. You see the red line. You see that the market goes up there, fails. But more important, very, very important, is that the market, and I pointed this out to you the other day, had an outside day up. If you take out the low of an outside day up, until you go back over that high, the market is now trapped a group of longs, and you try to wash it out normally by breaking even further. That's what the market is trying to do. Could it hit the downside target? It could. That number would be 1925. What negates this action is getting back over the highs of yesterday. Barring that, you have no real trend. You got a higher high and a lower low. When we come to momentum, you were going up, you're coming down, you're neither overbought or oversold or even going flat. You're just sort of drifting right here. Now, the gold silver, one of you, I appreciate what you said to me, okay? And the idea there, and it was brilliant. I love it. Very good idea. When the market is under the red line, 8207 is the 18-day average of closes. I'll put in silver colored here. I'll do my best to remember. It means silver's getting stronger than gold. When it goes the other way, it's going to be gold is getting stronger than silver. Got what I'm going to be doing with that? So right now, silver is suddenly, the fact that this differential is falling, get a bit stronger than the gold. When we take a look at the silver market, you can see why. You're back to fighting at the 18-day average of closes. You've come out of this break where you went from an upper Bollinger Band to a lower one, and now you're fighting a battle again at the 18-day average of closes. In the copper market, interest rates just sank this market. Think of industrial activity in the U.S. Think of what this auto strike tomorrow is going to do to a lot of things. Steel companies are going to be hurt. Tomorrow at noon, I have not heard the UAW say once they've had a serious offer. Without that, and they go out and they strike more companies close, this thing starts picking up momentum. I'm praying that we wake up in the morning and the Screen Actors Guild or the Writers Guild has gotten together and reached a deal finally. In Australia, fingers crossed, it looks like they have a deal at the Chevron LNG plants. This is all good stuff. I like Australia's method of solving strikes. It's done via arbitration. It seems quicker than what we do in America, not as prolonged. And so far, I know little about it. It looks like it gets the job done. In the copper market, nah, you're not trending. You're just stepping all over the board right now. I said it before, and I'm going to say it again. I am not a fundamental trader, not in any manner whatsoever. Do I know the fundamentals? Probably better than 80, 90% of the people I talk to, because I've done it all my life, and I read all day long about it. But I don't get why one would be buying platinum, palladium during an auto strike when they're catalytic converters, and there's not going to be the demand. High interest rates are not going to help the LVMHs of the world, the high-end jewelers. I mean, people that have money always have money, right? But the average person's not going out for those items. That's my guess. I'm not seeing it. I could be wrong. In the dollar index, yeah, be careful. You heard me, careful. You're saying, what's he talking about? You lose this embedded reading, and you're going to go back quickly into this 104.30 area. On the upside, until it's lost, the trade will buy the breaks. There's a way to do it. The market right here is still Thursday's price, not Friday's. So I can't tell you what to do via that. But I'm going to look here for the 18-day average if it keeps going up. So you put it together, you come up with a game plan, and you try to write logic for your clientele. And that's what I love to do. I write in my own unique fashion. A lot of bullet points, short paragraphs. The idea is I want this read in 1 to 3 minutes. I want to make an impression on you. I want to open your mind up to the different things that are happening. Example, tonight I'm writing, hey, looks like the budget's going to close. What reports that we look at all the time, CPI, all these type of reports, aren't we going to get? What's the impact? So I listed them all out. Tell me your broker's doing that. I doubt it. I do. So that's one of the themes tonight. Then I go into several other things, and all of a sudden the report is done. So if you're looking to, number one, see videos that go and give you why the chart is saying do this, do that, instead of a broker on the phone. Hey, John or Mary, why don't we buy this? It looks pretty good to me. I don't want to do that. I want to show you why something looks good, why it looks bad, what the thoughts are, and you can take it from there. How simple is that? My brokers will also work with you, and then you can discuss the trades. I have hand-trained every one of them on my system. So they know what I'm doing, and none of my brokers are brand new with me, all right? They've been with me many years. These guys know what I do. So if you're interested, let's give this to you for free to give it a try. You can go to iraepstein.com, free trial, move your cursor up here, go to the free offer area, and away you go. I'm Ira. I think we could be in for some evening up tomorrow. It wouldn't surprise me going into the weekend, and I will talk to you during the day. Take care.